HDFC Bank, India's largest private lender. For 3 decades, it was the gold standard of financial stability. Today, that legacy faces its ultimate test. Welcome to a comprehensive strategic investigation. We are diving deep into the evolution, the culture, and the 2026 governance crisis of HDFC Bank. It began in 1994. Deepak Parekh envisioned a bank that would redefine professional harmony and operational excellence in a newly reformed India. The execution was led by Aditya Puri. He built a culture of uncluttered banking, prioritizing long-term stability over aggressive top-line growth. Puri hand-picked veterans from global giants like Citibank and Bank of America. This Dirty Dozen team established the bank's core identity. Central to their success was the Laddu philosophy, a fanatical focus on the core business benefit. Forget the jargon, show me the Laddu, the profit. Operational frugality was the bedrock. In the early days, infrastructure was so sparse that meetings were held in industrial sheds and under trees. Puri's condition for joining was absolute. I want complete freedom to run the bank, no interference. This became the bank's cultural DNA. The results were historic. Since its 1995 listing, HDFC Bank has delivered a staggering 26% annual return to its investors for over 2 decades. Their technology moat, the Unix-based microbanker system, allowed for real-time banking long before competitors could catch up. By 2001, the bank was listed on the New York Stock Exchange, taking its disciplined, boring strategy to the global investment stage. They dominated niche markets, becoming India's second-largest collector of direct tax by guaranteeing unprecedented 4-day turnarounds. HDFC Bank pioneered vendor and dealer financing for giants like the Tatars, filling a massive credit gap that other incumbents had overlooked. Their managed risk approach was legendary. They famously avoided high-profile debt failures and navigated the 2008 crisis with their retail portfolio intact. But by 2026, the gold standard faced a fundamental re-rating. A series of leadership and regulatory shocks began to erode the governance premium. On March 17th, Chairman Atanu Chakraborty resigned with immediate effect, citing personal ethical misalignment with the bank's practices. The market reaction was swift. The stock plunged 9% as investors questioned the institutional stability and the erosion of the HDFC premium. A leadership vacuum emerged. Key veterans, including the group head of corporate banking and a 32-year veteran executive director, exited simultaneously. The crisis deepened in Dubai. Allegations surfaced that the DIFC branch missold high-risk additional Tier 1 perpetual bonds from Credit Suisse to NRIs. Internal probes highlighted systemic lapses. Allegations suggested NRI income profiles were inflated to bypass critical risk profiling and compliance thresholds. High-risk bonds were allegedly sold as fixed maturity products. Following the UBS write-off, Middle East investors suffered absolute capital loss. Longitudinal audits revealed repeated penalties from the RBI across KYC and IT infrastructure. The bank was placed under supervision. Accountability followed. 3 senior executives from the private banking division were asked to leave as part of an internal cleaning effort. Competitors like ICICI and Axis Bank have matched HDFC in efficiency, eliminating the disproportionate valuation premium once enjoyed by the bank. External risks added pressure. Escalating Iran-Israel tensions drove crude oil prices higher, squeezing the working capital of industrial corporate borrowers. The path to recovery is clear. A transition to a compliance-first culture and transparent communication to restore institutional trust among stakeholders. Expert views recommend an overhaul of disclosure norms. Affected clients will now sign explicit waivers, highlighting principal-at-risk scenarios in hybrid instruments. The bank is moving towards centralized product approval committees, ensuring risk and compliance officers operate independently of sales targets. Internal audits are being strengthened with mystery shopping and detailed audit trails for sales calls to ensure verbal pitches match written documentation. Fundamentals remain sound, but the era of the boring giant is being reinvented. Compliance must now sit at the very heart of HDFC's legendary culture. HDFC Bank stands at a historic crossroads. Reclaiming its premium multiple will require a complete restoration of institutional trust and ethical alignment. This is Rahul Malhotra signing off. Stay tuned for more exhaustive strategic investigations into the future of global finance.